Hello everyone and welcome back. In this video, I want to take some time to have a little bit more of an in-depth look at the portfolio on a monthly basis and how things have performed in general with regards to the broader context of what's happening in the rest of the world and what's happening in my personal financial world. Overall, in the past month, the portfolio has performed quite well. As you can see, in the past month we're up $1,387. For the 3 month, however, we're still down $285. On the 6 month, we are down $700. And overall, we are down $444. Despite this, I'm fairly pleased with the strength of the recovery overall. Given the height, or lows I should say, of the COVID dip, my portfolio was down over $4,000. This is a pleasing return to normality, and hopefully it represents a more robust recovery, although I have my doubts. But nevertheless, I'll take it. Let's have a look at the fees for this month. As you can see at the bottom of the screen, the fee for this month was $5.44. Now, people are going to bag on Raiz / Acorns for the fee, but in my opinion, it's, in the grand scheme of things, pretty superficial, especially once you're investing a fairly significant amount at a small account balance. Yeah, I could definitely see it chopping things up, as I've mentioned in previous videos, and people that are investing a few $100s, they might be better served going for something like the Spaceship Voyager investment platform or something like that, which has no fees below $5,000 investment. But for me personally, $5 a month or even $10 a month once the balance grows is not a lot in the grand scheme, considering that even using something like CommSec Pocket or Self Wealth, that they'll probably work out slightly cheaper, but every packet of ETFs one buys you're still going to have to pay brokerage. In the case of CommSec Pocket, it's $2 per thousand invested, and for Self Wealth, I think it's $9.95 per packet of shares bought. But I'm not as knowledgeable on those platforms as I am with Raiz. Just to take it back a second, I want to talk about the market performance, and as much as I want to believe that this is a true recovery, I do have my doubts when it comes to how valid of a comeback this is. The pandemic still rages on. The industrial output and economic output has been profound. Countries all around the world are reorientating their trade, especially with regards to China, and China itself is coming out of this with a renewed sense of assertiveness, especially towards Australia and the US. And I do think that a lot of this market recovery is based just on stimulus money. The banks around the world have printed literally trillions of dollars. So there's a lot of liquidity and a lot of money looking for a place to go. And the stock market is about the only avenue left with decent returns and yields. Savings accounts yield nothing. Bonds yield next to nothing. And it's hard to find a place to get any significant return. So people are betting on the stock market. But it just goes to show that timing the market's bloody hard, and I know that I'm not knowledgeable enough to do it, and I don't pretend to be, which is why I generally dollar cost average in each day. And how has this all affected me personally? Well, for one, throughout the months of March, April, and for most of May, my work hours had been reduced down to 3-4 days a week, as has most of the population around the world, even in this country. I guess I should consider myself fortunate that I haven't been stood down entirely, and that there are things like JobKeeper for the people that are unfortunate enough to have been stood down. My heart does go out to you, and I hope you all find work again soon. But lately, the last few weeks, things have been on the uptick. I've progressed back to working 5-6 days a week, and my income is basically back to where it was pre-pandemic, thankfully. And while job security is relatively high for me, I have taken the last few months sort of during the recovery phase from the dip in March to build up some more emergency funding. I went into this with an emergency fund, but I did slow down my contributions somewhat just to bolster that somewhat in the event that my job ceases and there is no JobKeeper anymore. I do want to have a fairly robust cushion, but now that that's done, I can get back to contributing and building this account in earnest. So yeah, for the last probably 2 months, I've been contributing at maybe half the rate that I usually do, which it may have hurt my returns just a little bit because I didn't buy every single bit as cheap as I could have, but at least I didn't withdraw during that time, and at least I was still contributing something. And now going forward, I have sort of a more rock solid basis to contribute on and don't have to worry if this downturn becomes more severe and protracted. What do I plan to do from this point forward? Well, in the next month and coming months, I'm probably just going to continue the course much as it is and try and contribute as much as I can. And it'll probably be, for the most part, daily deposits. For the last few weeks, I've been doing $100 a day, and hopefully I can continue that forward. At the moment, I'm currently in the Emerald portfolio, and it's something that fits my risk tolerance nicely, and I like the breakdown between Australian and international equities. I think it's much more balanced than the other Raiz portfolios like the aggressive, but that's just me, and your mileage may vary. I am curious about the sapphire portfolio, however. I believe that having a little bit allocated to Bitcoin/crypto, it might pay off, it might not. It's another uncorrelated asset class, and if we see things like dollar weakness or uncertainty, Bitcoin could potentially be a safe haven for people's money. It could grow in value. We don't know. Again, it is highly speculative, but I would be willing to give it a try. And I'm strongly entertaining the notion of switching this portfolio to Sapphire, but I haven't made a final decision because overall I'm fairly pleased with how this one's held up, despite the recent circumstances. But what I'll do, I'll wait at least another month or so. I want the dividends from this portfolio to pay, which will probably happen early in July. And because the two main ETFs in this portfolio, Rari and FT, pay bi-yearly, they tend to be fairly robust, and I don't want to miss out on them. So I'm just going to leave it there for now. Thank you for listening, everybody. If you liked the video or you have any suggestions, please feel free to leave a comment. Feel free to like the video, subscribe if you feel so inclined, and I will catch you guys in the next one.